the Redbook sales index yesterday after this, it gets put out at 8:55 every Tuesday morning. And it came out negative 0.4%. That's the first time since the March 2020 breakout of the pandemic that sales have actually gone negative, but they've just been going lower and lower every week. And what's wild is that, we haven't actually seen the period yet where tough comps really start to come into play. So what is a slight negative number is just flat out bad. Any way you cut it, it doesn't speak well about any part of retail.
One thing to hit on this morning is on the auto side. We did get yesterday the full month of June numbers out of Manheim. It's pretty interesting update. So large decline in used car values month over month on a seasonally adjusted basis. The index was down 4.2%. I believe that's the second largest monthly decline in the series history, going back to the 1990s. The only exception was in April of 2020 due to the start of the COVID pandemic.
One of the reasons that, for example, Manheim would be under pressure is production of new automobiles is normalizing. So we're seeing more cars get produced, more cars available on dealer lots, wait times for popular models coming down, and that relieves some pressure on the used market. There are, of course, also the financing cost dynamics. They all kind of point in the same way that put pressure on used prices. The place where we see the biggest change, the biggest really rate of change is in ag equipment. So if we look at large ag tractors, very high horsepower, more than 300 horsepower, these are really soaring. So, year to date, inventories are up more than 50%, right? Since sort of the January time period. It's not seasonal. Pro-cyclicality here in Deere, which is a deeply cyclical company, is really evident. And the interplay between the used market and Deere is they're an active participant in the used market to try and stabilize it. And what it looks like is it's getting out of hand in this data, right? We're seeing yet another indicator of sort of this negative ag dynamic emerge. And even in June, we saw a sizable leap up in used ag equipment availability and inventory because just the demand side is softening, availability of new is increasing, financing is more costly, all the same dynamics that we saw before.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.